Okay, did it start? All right. So I'm just gonna show what just happened today. But last week I've been getting some crazy setups like this up here, this premium play up here. Then you got this discount area down here, and then this discount area right here. And then what happened today? Sell, buy. You could have sold it. Look, you could have sold it up here. Premium, discount, discount, premium, premium, discount, discount to a premium. Then went from a premium, it dropped all the way down to a what? To a discount area. So this was the focus today right here. So this what happened today. This you see this little blue area right here. So let me just show you. So during London session, when the market was up here, prices in a premium. So I try to feel like this. It's like where do we come from? Where we drop down to? Anything below? You see this right here? See what it says 0.5? That's the middle of the range from swing high to swing low. From swing high to swing low. 50%, that's 0.5. This the middle of the range from swing high to swing low. So anything above that 50%, we consider that a premium market. We consider this a premium market, meaning we're looking for sales on a sales setup on a smaller time frame. Anything when price drops below this 0.5 to 50%, we're looking for we're looking for a buy setup on a smaller time frame. This is the discount area. So see how price dropped all the way down below 50%? It was at a major discount this morning. So we're looking for buys because price is at a discount. So let me take this off. So once you draw your field from swing high to swing low, and you know where you at on the chart, you can take that field off. So boom, okay, you're trying to see where can you get in at. Once you figure out where you at on the chart, so boom, let me show you this. So this what happened today. What is this right here? What's this below that low? This little wick right here. Money. Let me show you this. Let me delineate. Okay, that was 8:30. So play this up. It's on New York time. Where it's 9:30 at? Okay, boom. So what's the okay? Let me zoom in so y'all can see. There we go. So you see this whole push down right here? This is one whole candlestick. You see these three red candlesticks? How they just went down like that? That's one whole candlestick. You know what we look for when price is at a discount? What's the first step? You want to see a run on stops, a stop run. See this little wick right here? Like retail traders, when price dropped all the way down, you see how price started to go the other way. And when price revisit this little area right here, that's like retail support. So big money, they know that, so they're gonna drive price down. They had to sell in order to buy. So when they selling down, they stopping you out your buy position. So these people over here that was all buying in this little consolidation area, they had the direction right, but they weren't patient enough for big money to get in. But time and price is very important. Let me show you. Time and price is very important. You see why I got 9:30 highlighted on my screen right here? You don't want to get in a trade before uh, it's 9:30 Eastern, 8:30 Central. So you don't want to be in the market. I'm gonna show you why. So you see how this setup formed before that 9:30 open. Then look at this. What is this right here? This was that whole little gap right here. So this setup had already formed before that 9:30 open. So so boom. You see how that it wicked down into it, tapped into that. This was still an open little gap right here. It had hit it. Okay. Say you play it right here. What I mean by play, like you bought, because price was at a discount. So say you bought right here. We don't enter a trade before. We don't enter a trade before. What is it? 9:30. So if price is at a discount, we take profit at a premium. You see this blue area that I just highlighted? We call that a gap. GAP. And a gap is it's like a one-sided market. Like, say for example, a big player they put sale, and you see how price just slipped down. This red counter right here, how it just slipped down and it closed. You see this little highlighted blue area? We call that a gap. It's just a one-sided market. All sales, no buys. No buyers were offered in that blue area. From this week to week, it was no buyers in this blue area. Just all sales, no buyers. Because the market has to be offered fairly on both sides of the market. It has to offer sellers and buyers. These two blue areas right here, they still open. So this is why I don't like getting in a trade before that 9:30 9:30 open. Let me show you this. This what happened. Say we tried to buy right here, and we was aiming for this whole gap field. These two gap fields right here. That's a good risk reward, a 7-1. Now let me show you this. So boom, it lets it, wicked you in, came close to stop loss. But then remember I was talking about that 9:30 open. Watch this. See that? When the New York Stock Exchange opened up, the algorithm is programmed. It's gonna go crazy. Like, it's constantly seeking for liquidity. So as soon as it opened up, it's spiked down. See, look at it. Boom, it stopped us out right here. You see that? Look like it wanted to go up, but when 9:30 hit, let me take this black line off. When 9:30 hit, you see how it just slammed all the way down and wicked us out like that. Our stop loss is right here, right below this low. Spiked all the way down. But what did that do though? All it did was another stop. So it's like, let me see. So it's like, let's see. So it's like, oh Dion, you here? So boom, we lost this trade right here. But check this out right here. You see what happened right here? Let me take this off. See this push down right here, this red counter right here. How I stop these people out over here on this wick right here. Stop run. What's the second step? Market structure shift. Did we get it? See this little short term high right here? Price to the right closed above this little short term high right here. You want to see the body close, not no little wick. Then price came back to the gap. It went up, but when 930 hit, you see that red candle? The algorithm started going crazy. It started seeking for liquidity. Price spiked all the way down. And if you look left, what happened? It started out right here. So boom, we lost this trade. Okay, no biggie. So let me take this off. Let me clean this up. All that happened was it did another what? It did another stop run. All the stop run is manipulation. So you see this red counter how it pushed all the way down like this one right here. This red counter right here. It's the same thing that happened again. They're constantly seeking for liquidity. And liquidity is money. So when this red counter pushed down, that's another stop run. Take this off. So it's like big money. They're saying, if we want your liquidity, we want your money, we're gonna stop you out. So the people that played right here on this green counter right here, when price came back down to this little gap, and they had the direction right, but they weren't patient enough to wait for big money to get in. So when that 930 opened, they stopped all these people out over here. So it's like they're saying, if you. So what's the first step? We got our stop run right here. This this red counter right here. What's the second step? You want to see a market structure shift. Go to your line chart for my new people. You see this little short term high right here? Price to the right. Price to the right closed above this little short term high. That's the second step. Now the third step, you want to see the price leave a gap. See this green counter right here? That's the gap right there. So now you waiting for price. So when the next candlestick open up, you want to see if it retakes this green candle. This is a one-sided market, just all buyers, no sellers were offered. So you're waiting patiently. So boom, as soon as it does that, you can play. So boom, you could have played right here. Let me show you the risk to reward. So we're going long. Put your stop loss. Let me show you this. You can put your stop loss. You see this at the close of this red candle, or you can put it right below that little wick. I put it at the close. We don't need nothing too crazy, too wide, or too big. So if price is at a discount, we take profit at a premium, meaning you see all these previous highs, these short-term highs, look left. See all this price action to my left up here? See all this price action over here? It's like they design these highs and these gaps when price is breaking down to a cheaper price. But, once they satisfied with taking profit on their sales and they start big money, start buying, when they take price higher, they're going to come back and take all this back. They're going to come back and get this later. You get what I'm saying? So you got to look left. You got to look left to get right. So it's like we predicting the future. You get what I'm saying? So let's say we bought 3 times right here. And then you see these equal highs right here. See why I got this black line right here? This is like retail's resistance. So like it's like when price came to this line, it sold off. Retail trades, they waiting for price to come back to that black line. So you see. They waiting for price to come back to that line. So all these people up here that's selling and buying, all this trap money up here, this liquidity, all these people they putting their stop losses above this black line, somewhere over here. So it's like a pool of money. It's like a pocket of money. So that's what we aiming for. So these are our take profit areas. We're gonna play it out. Let's see. You gotta be patient, trust the setup. Then boom, look at that. You see how aggressive that pushed up? You know, we can't let me take this off. Keep it clean. We can't move price like this. You know, you see how big this count stick is right here? We can't move price like that. That's a whale. That's probably like $1 million, $2 billion or something like that. Something crazy. We can't move price like that. You see how prices exploded up to the upside? That was a nice little leg right there. And then let me take this off so you can see. Move this over to the side. And then you see how when price exploded up, what did it leave? See this little open little area right here, this little gap. You see when price started breaking down, what did it do? It tapped into it to fill in this little area. You see that? And then look at this. What's this? Well, this high. It's a bunch of money, a bunch of stop losses. And then look at this right here. What did it do right here? And left another little short term high right here. More liquidity, more money. Price is driven to those areas. Okay, look at it. It made a double top right here. Look at that. Retail resistance. So once they see it selling off, when it come back up to that to this same area, they gonna sell it again. Where would they put their stop loss? Right above this black line. And then price just shot right through it. That was the buy right here. And then price. So let me show you this. See what I got my field. It's like, where do we come from? We came from a discount market. Price went all the way up to a what? To a premium market.
Yeah.
And then you see this, anything above 50%, we consider it a premium market. So boom, prices at a short term premium right here. And then let me see, what was it, the 1 minute? Yeah, it was on the 1 minute. Let me just show you this. Thing be going fast. Let me take this off. Keep it clean. I know y'all eyes going crazy. But yeah. So you see these black lines? See these black lines right here? These two black lines right here? Price was, you got that build up right here. This liquidity price is going sideways. They just trapping a bunch of retail traders out there in the world. Then you see how price just reached up right here. It's one whole candlestick. You see how it just reached up like that. If you look left, what did it do? It ran above these short-term highs right here. We ran out these equal highs right here, and we ran out this short-term high right here. So that's our what? Stop run. That's our run on stocks manipulation. All right, so let's play it out. What's the second step? You want to see a market structure what? You want to see a market structure shift. So you got to go to your line chart for the untrained eye. You want to see the highest, you know, short-term low being broken. So price to the right close below this short-term low right here. Now you got to ask yourself, did price leave a gap right here? So it's like you can hedge your position. So say we caught this buy right here and we rolled it. That's a nice little lead. From here to this way it stopped at. That's a nice little lead. 114 points. That's a nice little lead. So you could have bought and you could have been still holding, and then you could have sold it right here. Let me show you. So now you waiting for price to tap into that gap. Okay, boom, it did. So boom, so you could have sold it right here. As soon as it tap, you could play anywhere in this blue area, but your stop loss got to be right above the high. See where I put this black line at? So we play it right here in the middle. So we went short while we selling because price is at a short term discount right here. So if price is at a short term discount, short term premium, we look left to get right. Where the money at? Where the money at? What's this below? This low. Money. What is this right here? That's it. You see that little gap right there? You could have aimed for right here. See that? You see the risk reward where it say 3.07, meaning you risking 1% of your account to gain 3. So we're still holding the buys from down here, but you could have sold it right here if you wanted to. If you want to hedge your position, we play ping pong. So it's like we catch the low of the day and we catch the high of the day. You get what I'm saying? Then let's see what happens. Oh, let me show you this too. Since we were here, so say we say prices want to keep going up higher, making higher highs and higher lows. You want to see this whole thing, happen again? Consolidation. You want to see a run on stocks. You want to see price stopping some kind of people out. Then you want to see that market structure shift, and then that price leave a gap on this leg. When price come back for that retest of that gap, now you want to play. Your stop loss got to be above the high. Same target. You want to take it down to a discount, to a cheaper price. So you see how this price reached up, but it's a little short-term high. You want to see that market structure shift. Okay, boom, we got it right here. When price come back up on this leg right here, you want to see a gap. When it come back up, take it on down to a deeper discount, to a lower price. You get what I'm saying? That's what if you was to lose this trade right here. If you want to just keep shooting up. Let's see. Look at that. Where did price go? Did it hit our first TP? You see the short term low right here? Look left. Right here. Below this black line. Look at that. Look like it came up like it wanted to shoot to our stop loss. But you gotta trust the setup. You get what I'm saying? They do this to try to get you out of it so you'll miss the whole move. Cause look at this. From this entry right here, that's a nice little leg, 36 points. That's a nice little leg. Boom, look at that. If I stretch this out in the future, step into that gap. Did it tap into this gap right here? If we look left, look left to get right. See how we got right here? Look at that. Did it fill in that gap to the T? This whole little blue area that I had highlighted? Yes, it did. And then, on what was that, the 5 minute, look how precise this entry was. This entry right here. Right here. See how precise this entry was? This that whole stop run right here. For the people that tried to get in early over here, when 9:30 hit, look like it, when this had spiked down, it let you get in right here. It let you get in. But when 9:30 hit, it went up, spiked all the way down, stopped you out, and then price went the other way. It did another market structure shift. Boom, right there. Price left a little gap right here. Price traded back into it and exploded up to the upside. You see that? These are some very explosive trades. You know, some very impulsive. You know, nice moves. So if you would have still held this trade and you zoom out, okay, we filling this gap up here. We're filling this one right here. If you zoom out some more, where the money at? See where I got this right here? Equal highs. That's where the money at now. But you could have played this little short term sale and it filled in that gap. That was a 1 to 3 right there. Try to clean this up. Yeah, that was a nice 1 to 3 right there. That sale was short term because the real move was this buy. Because we still have a lot of targets to the upside. And if we keep looking all the way to our left, this is where the money was at. When price shot all the way down like that, it left these gaps. So once they started taking profit, they took price the other way, filled in these open areas, running out all this liquidity over here now. This is where the money was at. Once they filled in all these gaps over here, this is where the money was at now. You see this right here? Got this consolidation right here. Just a bunch of build up right here. A bunch of build up orders. Prices going sideways, doing nothing. But what sits above these highs, what sits below these lows, it's like a bunch of money. The algorithm is constantly seeking for liquidity. It's going up. It's searching for pending orders in the market. You know, prices is driven to these areas. It's gonna go where majority of the money sits. Let's see if it shoot right through it. See these equal highs up here. It's a bunch of money sitting above this black line. See if it can shoot right through it aggressive. So it's like they let these folks win. They just build up this liquidity and they're gonna shoot right through it aggressively, just blow their account. Prices. See if it shoot right through it. Boom, look at that. You see that? So it's like they let you win temporarily, you know. So if you sold it up here, this how retail trades they look at the market. They look like, okay, it touched this line. Okay, it sold off. When they come back to it, I'm gonna sell it again. Okay, it sold off again. It came close again. I'm gonna sell it again. Okay, we winning. We up 1 million. You get what I'm saying? It came up. Oh man, not again. They selling it again. So it's like above this black line, it's a bunch of stop losses, like protective orders. So say you were selling right here. If you have the direction wrong, you know, you'll have your protective stop loss. It'll take you out the market if price come back to your above this black line. Big money they know that they let you. If these people over here, if they didn't take profit, they better because they coming for your liquidity, your stop losses. Price is programmed to you know to take you out of the market. They try to get as many people as they can on the wrong side of the market. Then price is gonna just explode in one direction to take out those orders, grab your liquidity. So it's like they spit in your face. It's like they spit in your face and they say "F you," and they're gonna take your money and run to the bank with it. They do this every day. So it's like saying "F you," spit in your face. They're gonna take your money and they're gonna buy, their new Rolls Royce with it. You see how prices exploded up to the other side. Take your liquidity. Liquidity is money, and you got to keep in mind that the entry was down here that for that buy, and then you see how prices, run out this liquidity, we fill in that gap, you know, higher targets to the upside. So it's like they wipe the board. It's like they wipe the board. So this you got to keep in mind. We're on the 5 minute. If I zoom all the way out, if I go to a higher time frame, let me see. Like we still got more targets to the upside, even though prices in the overall premium. Like we still got liquidity up here, a bunch of money way up here. Let me go to the 1 hour. Like if I keep zooming out, let me see. Let me go to the daily. We still got. Let me go to the daily so you can see this. We still got a couple little open areas. Everything pretty much efficient on the daily time frame, except these little areas right here. We pretty much filled everything in. into early. Except this area right here. I already got highlighted. These two little blue areas right here. This one, this little gap right here. We should, tomorrow shoot past this little area right here. And then we got this one right here. But everything pretty much efficient except these two blue areas. Because we already, from this accumulation area down here on the daily, prices have been building up. We done filled in this gap right here. This one right here, it's just these two up here. Everything else pretty much efficient. Meaning, big money, they can take all this back if they want to. They can take all this back if they want to. They can take all this back, man. They can, pricing been traded into fairly, except these two blue areas right here. So price can just keep shooting up. It's gonna do two things. It's gonna keep shooting, but I see more upside that we don't see. We don't see. But this was the play of the day. Did it freeze? Come on, trade. Thank you.